In this video, I will give an S&P 500 update. I will update trade ideas for NVDA, Amazon, Apple, and Procter & Gamble. Then I will give a brief analysis of the dollar and its impact on the S&P 500. I will also be doing a second separate video for FX this weekend. It will give analysis for the Euro USD and the USD CAD, so be sure to check that out if you are interested in the FX markets. This is the daily chart for the ES futures, and as I discussed in the prior video, I believe the 2-month-long blue cycle on this chart here came in on Friday, March 15th. I used the NASDAQ to help confirm this, as this pullback was extremely minimal. I also discussed the impacts of a minimal pullback on the follow-up cycle, the cycle to come after that. So if you're interested to learn about that, be sure to check out the prior video. In orange here, you can see roughly a 2-week cycle. I have added this blue line here to note that this is going to be Thursday because Friday is going to be Good Friday. Markets will not be open. That would be the expected trough for the 2-week cycle based on the averages. It can come in before that, it can come in after that. However, when a trough is expected on a Friday, if it's going to come in late, Monday is already a bit of an extension. So I think there's a good possibility this 2-week cycle will come in a little earlier, perhaps on Wednesday or Thursday. As I've mentioned in a number of prior videos, one way I look to confirm potential highs or lows during different cycles is taking out the prior day's high or low. In this case, it would be a low as we'd be moving into the cycle trough. However, considering the prominence of the lower time frame cycles over the last few weeks, where we're getting more prominent 1-week cycle troughs, I do not feel confident in saying the 2-week cycle trough is in. It could just be that we're moving into a 1-week cycle trough and we'll get some continued upside before we put in the top for this 2-week cycle. That said, as I mentioned in the last video, I do think the upside overall for this next 2-month-long cycle is a bit limited. And as you can see, we have been running up against, this is just a trend line we continue to bounce off of. We got pretty close on Thursday. We didn't actually touch it. But if we go look at another chart on the SPY, you can see I have a slightly different trend line. This is for a shorter period of time, whereas the other one on the SPX, this is a much longer period of time. And you can see, again, on the SPY that we did touch this trend line and found resistance. We could definitely continue to move up along it, and that would not surprise me, but I don't expect that we're necessarily going to break out, at least not during this current 2-week cycle that we're in, based on the orange 2-week cycle you see here on the E-mini futures chart. This is the NVIDIA daily chart. As I mentioned in my prior video, I would be looking to enter a long on NVIDIA using the expected cycle trough in this approximately 2.5-month-long blue cycle you see down here, as well as the median lines, which I used the prior cycle low, prior cycle high, and then this initial trough for what should be the new 2.5-month cycle. And it gives us this median line set, which I used to find what I would consider to be the ideal or preferred options trade for this cycle. This is a short-term trade, and I had mentioned what I would be looking for. I kind of had a wish list for both NVIDIA and Amazon in the last video based on price potentially opening at the or around the close of Wednesday's price action. However, in both cases we gapped up, so I slightly modified both trades. For NVIDIA, I bumped the strikes up by $5 from what I was hopeful for, so I bought a 925, 930 spread with an April 5th expiration. Each contract cost $2.10 or $210. And the selection for that was also based on this median line. So if we go out to April 5th expiration date, as long as this median line continues to hold, price should be above $938. So with the short side of 930, that means our spread should close in the money. In the last video, I did also discuss how I would be looking to close this around 950. I have since reconsidered that. I do think we may find some resistance here as we move into what should be the 2-week trough on the E-mini futures. But I determined that based on the amount of profit I could receive at this level with the adjusted strikes, it's insufficient. So I'm going to let it run, and this will be a dynamic stop loss. This is the Amazon daily chart, and in the prior video, I also discussed a potential trade opportunity for Amazon. Amazon also gapped up, which did not allow me to buy the spread, or actually I was planning on selling puts. It did not allow me to sell the spread at the amount of credit I would have preferred. So I altered this trade also using the median lines from the prior cycle. And so what I did was exactly like I did for NVIDIA, followed this up. Based on where we gapped up to, I actually extended this. In the prior video, I was looking for a 1-week expiration on Amazon. I ended up also doing an April 5th expiration, so 2 weeks, and did the same thing by following this out April 5th. As long as this median line set holds, we should be above 182.53. So the spread, I bought a call spread with a 180 long side and a 182.50 short side. And this is exactly 182.50. So as long as we stay above this lower warning line, I will continue to hold this spread. The exception here is if we reach 185, I have this red line at 185.36, but if we reach 185, I will close that spread, because if we zoom out, we are approaching all-time highs, and 185, or this 185.36 level, has been an area of resistance. Overthrew it and fell, but then we retested it. We retested it here. So I will take that off at 185, regardless of what day we hit that level, assuming we do hit that level. Because of the prior rejections, I don't want to hold that if we do reject in a strong way and then ultimately afterwards potentially break this lower warning line. I'd feel much more comfortable just taking profit at that level. This particular spread cost $250 each. So on a 5-wide spread, that does leave the upside for 100%. However, in both cases for NVIDIA and Amazon, I won't let them go to expiration, unless if maybe for NVIDIA it happens to gap up and run up in a huge way prior to expiration. But even then, I would close it out before expiration. This is the Apple daily chart. And while I am expecting a bounce from Apple here, and it seems like we have bounced off of this median line set, which just like on the other charts, the Amazon and NVIDIA chart, what I did was I used the prior cycle along with the current cycle. However, in this case, because I think this might be this new 2-month cycle high, and if it is coming in very early, which is going to be very bearish for this cycle. But I used these pivots to set up a median line set, which again, we've already achieved. But this set could potentially guide us down to the low of this current cycle. Considering the bearishness of this candle, I did not wait until we broke a prior cycle low, or if this is the bottom, I did not wait, obviously, until we put in this cycle trough to enter a short position. I did only open 1/3 of a position, and it is a spread. And I did that, again, understanding we may get a bounce here. In fact, we do have this potential median line set here, which I've discussed in the last video, where we may get a bounce from. And in the prior video, I did mention I think we would get to this median line set, because in many cases you do. However, in corrections, so against the trend, that is when you are more likely not to reach the median line. And I think that is what we might be seeing here. We had major resistance at 180, which we did not even reach before we sold off in a big way. So I went ahead and opened 1/3 of a position just in case we do begin to break down. And that was a spread at 165, 160. So I bought a put spread for $1.40 each, or $140 each. If we do bounce, I will continue to add 1/3 at a time to that longer term position. And what I'm expecting to do here, because I am, as I've discussed in prior videos, expecting a new lower low at the end of this blue cycle trough, as we've already broken down from the prior blue cycle trough in a longer term cycle. So we should ultimately be moving towards a new low. I will slowly be adding to the long position, unless if we break down, I'll add the other 2/3 immediately. And then once we do break a 2-week cycle, I will begin to trade the 2-week cycles as well. So ultimately, I will be looking to have 2 different positions on an apple, similar to what I did over here at this time. And because they are 2 separate trades, or based on 2 separate cycles, I will treat them very differently. So in any videos going forward where I discuss the apple positions, they will be considered separate positions, a longer term position, and then any other shorter term positions that I open and close along the way. Considering the bearishness of this cycle, it is possible that we will ultimately break below the lower warning line of this median line set. And what actually might be more appropriate would be, this is not going to be perfect, I'm just doing this pretty quickly for the purpose of this video, would be something like this, a standard median line set, which you can see is steeper than the modified Schiff. And perhaps this is the set that will ultimately bring us down. And what could definitely be possible here, I'm going to remove this for now, is we may be moving towards the lower warning line of this longer term median line set. So if we break below this median line here from this longer term median line set, we could have a very rapid sell-off down to the lower warning line as we move into this longer term trough. So if that begins to happen, that's going to be a potentially huge setup for not only the longer term cycle here in blue, but then each of the shorter term cycles as well. I've mentioned some other targets based on gaps and retesting this trend line, but it is possible we come down to this lower warning line. So that will be something to keep an eye on as these cycles play out going forward. This is the daily chart for Procter & Gamble, PG. I have not entered anything yet. However, it appears this first week cycle is in of this longer term monthly cycle. And then after hours today, PG had actually moved down. And so it looks like it may already be looking to take out the prior cycle low. And if that's the case, then I will be entering. So that is something to keep an eye on. Another thing I will look to do as far as an entry is if we do break above, I've decided that I will at least use this trend line going out to sell call spreads over here, similar as to what I discussed in a prior video for the SPX. I'll flip over there really quickly just to show you. Should we move towards this upper warning line, considering we're expecting a trough in May or June, I will use this upper warning line by going out and up to find the strikes and dates at which I would like to sell call spreads. Well, I will do the same thing for PG. And then finally, when we do break down, that's when I will actually start to buy puts. Finally, I'm going to talk about the DXY. I haven't done any FX videos in quite some time now, but I want to talk about this because the dollar, while it's not a perfectly inverse asset to the S&P 500, at times they are inversely correlated pretty well. And we do see strength in the dollar, and we are also seeing strength in the S&P 500 right now. And I do expect the strength in the dollar to continue. We are coming into some resistance based on these upper warning lines. I know this is very busy. I have a lot of median line sets on here. But the point is, with the dollar continuing to show strength, eventually one of these is going to roll over, whether it's the dollar or the S&P 500. And I think it's going to be the latter of the two. I think it will be the S&P 500 in the next few weeks, maybe a month. So as that happens, that will also set up a lot of good potential FX trades. And I actually entered a few this week, which I'm going to discuss in another video, which I will link here. As always, thank you for watching this video, and be sure to subscribe for more.